Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, February 12th. Something very weird is happening. We've got red futures today in the pre-market. We haven't seen that in about 10 days, so buckle up. No, I'm just kidding. We are red though, and it has been a while since we've had a seeing some red in the futures. We've been so accustomed to having this unidirectional upward bias that it may take some getting used to here. Before we get into it, let's just talk about a couple things. We've got pretty light calendar today. We've got Michigan sentiment. We've got Baker rig count and oil. Pretty light economic calendar. I didn't see a whole lot else. Yesterday we had a 30-year bond auction where it didn't go quite as well as the 10-year auction on Wednesday. So yields ticked up a little bit there. TLT was down a little bit yesterday. Nothing major. So let's get, and don't forget, Sunday, Valentine's Day. Don't get yourself in the doghouse right out of the gate in 2021. Make sure you take care of number one. Do something nice on Sunday. Get out of the charts. Go out and do something with your favorite somebody. And yeah, you'll start your week off like nobody's business. So let's look at SPY real quick. We've still got this bearish momentum look with the high level bear cross. Hasn't resulted in much as far as price goes. We've been trapped here between 388 and 391.50, which lines up with the bottom side of this midpoint of our rising channel. So we're in this consolidation chop zone between 391.50 and 388. We've got to recapture this breakdown candle that we talked about the other day, this whoosh, this flush bar that spanned this whole range from top to bottom. If we can take out 391.50, jump to the top half of the channel, that would bode very well for a run up to the high 390s for a tag of the upper channel range. If we can't, we've got the rising lower part of the channel here. You wouldn't want to see that break, if you're a bull. You don't want to drop down below the channel, then down below 388 with a bearish momentum look. Then you're probably looking at 385, excuse me, where this original breakout came from. So let's watch that and see if the now I got this going on. Sorry about that. Let me get this out of here. I don't know why that all of a sudden started to reboot. Sorry about that. Let's look at the 30-minute chart. Here you can see the consolidation a lot better. I could have easily drawn this out to back here, but I just put it here. Midpoint of the consolidation range. If you're not an active trader, I would be setting alarms at 391.50 and 388.50, and those will be your decision points on either a breakout or a breakdown. Or you can buy here at the bottom of the range. That would make sense. If you are bullish, a buy here, a buy here. This will be support until it isn't. If you get a move back down to the bottom and it looks like it's going to hold, you can take a long there with a stop just below. But if it, if it breaks, then your bias has to be lower. You can see the momentum coming out, the RSI drifting lower. That's typical within a consolidation, and you can tell that in a bull market, you can have a drift down in momentum, but it doesn't do anything to price. So that's what you typically see in these consolidation moves. QQQ has been hanging around the top of this 2-hour channel that we have. No real difference over the last several days. We still have this persistent bearish divergence on RSI and momentum as we're, at or near the highs, but momentum and RSI are drifting lower. As we've talked about, if you were to get a move back into the channel, the default target would be the midpoint of the channel down here at 330. I mean, that just stands to reason. So, the bulls want to see this held and move up here to create a new range. We'll see if they have the power to do that. Here in the 30-minute chart, if you look back to yesterday's chart, I've redrawn the lines with a different look than I had. We've got this consolidation area with an upward bias within this channel. But you can see 335 has been a hard cap so far. So for the bulls to make really, some decent progress, got to pop 335, then get above the midline of the channel, and then that would open the door up into the low 340s. So if price drops below 333, below the bottom part of this channel, then you're going to probably dribble down to 330.50 down here where it tested, and possibly even down into the 329s to double check this low here. IWM, nothing going on. It was a flat day. We had a look down to the top of the gap where we got a good bounce, bearish momentum look, bearish RSI look from the standpoint. If I were to draw a line here, and I should have done it, a trend line up, we've broken trend to the downside, and we've got a bearish PPO cross here. So IWM is kind of on watch for a further down move. And you can see here on the 30-minute chart, series of lower highs, series of lower lows, starting to carve out a little downtrend. And yesterday there was an interesting trading op. If you caught it, I know a couple people did in the trading room. We had a flush, came right down to the gap. And remember what we talk about, first tag of a gap, very good chance for a bounce. So that was an objective place to try a long against the top of the gap at 223. And then you got a $4 bounce out of that. Really never looked back. So that was a great little trade. If you were on top of it, you had your gap marked on your chart, and you saw that move. You actually had some time to buy it there because we had this bar come down and tag it, and then the follow-up bar hung around down at that 223 area for at least 15 minutes, something like that. So you did have time, and that was a good tell because the follow-up bar didn't come back down through. So that was a good tell that 223 was probably going to hold, and it did. And like I said, you got to move back up to the top. Now today we've got a red opening, so are we going to come back down this way and test that gap again, or are we just going to oscillate, or are we going to pop above 227 and then open up some upside back up to 230? We'll have to wait and see. Facebook, I've redrawn this chart as well. just for technical illustration mostly. Consolidation here, resistance, 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 breakout, support, support, support. So what was once resistance becomes support, new level of resistance established, and now for bulls to make progress, they got to break above 272 and hold it, and then there's a chance to move up to 276. And you can see here in these boxes, you basically got the measured move. The measured move target of this consolidation is the width of the box, and so you stack this width on top of the box and you get this one. So, you know, that's nice technical action. Now, nice technical action can still be frustrating because, you know, we thought, oh, we got a breakout, and then, you know, we got another breakout, and then we got another one. So it just keeps failing at that well-defined level. So if you didn't want to mess with all that, set your alarm at 272 and set your alarm at 268 and be ready to rock and roll when and if price either breaks above or below the range. Here in Apple, I've done exactly the same thing. I've redrawn this to show a consolidation range between 134 and 137.50-ish. We're at the bottom of the box. So if you wanted to, I mean, yesterday would have been better, obviously, right at the bottom. But if you were at the bottom of the box and say, okay, there's my objective long, I'm going to be long against 134 with a stop just below. And if nothing else, look for a move to the top of the box, $3. I mean, you're not going to get rich, but it's a good trade and one you can take. And when you get to the top of the box, your objective trade is to get short for the bottom of the box. And if you get the breakout, which is really what you're looking for, then you can immediately flip bullish and look for a larger move up to 141. That would be a nice $4 or $5 trade. But if you didn't want to mess with all this chop, set your alarm at 137.50, set your lower alarm at 134, and be ready to go. Tesla, really weak action. I think, yeah, this was the opening bar. This bar up to 330, I wasn't watching it closely, but now that I'm looking at it, look at that nice tag of our well-defined level at 330. And when it couldn't get past it, you know, they faded it right back down to 310. So that was, I mean, with all of this stuff, I mean, you got to be sharp. You got to be ready to go. But, and I've been posting this stuff in the trading room. This is why I draw the lines, right? Having that well-defined level already pre-identified. If you had that on your chart, you saw the reach up candle to validate that level, and then they faded it right off the bat. I mean, that's $20 there. Even if you only captured, you know, 18 or 15, still a good trade. And actually, you got to reach down all the way to 800. So, you know, all told, you went from 330 or 830 down to 800. That's a $30 move. Even if you didn't catch all of it, I mean, that's a nice day in and of itself. So I still view 800 as your main pivot. There's been a lot of trading right around 810, and you've got a larger VOP level right here, which is where price has found some type of equilibrium. But let's just say I was bearish. I wouldn't want to take a short on 810, knowing that there's this level here at 800. I would wait until, if and when that were to break down before doing anything bold on the downside. Here you got to favor higher until this breaks. So you're at the bottom of the box. Your natural target is going to be 880. A lot of work between now and then, but that's all you can do is, take your position against known levels and then shoot against them and see if the bulls can power up to the top. Microsoft continues to frustrate, chopping here below 244.50. I thought we had a breakout. Several instances turned out to be head fakes. So, north of 244.50, I think you can be long. I wouldn't even bother really with a short unless the market gets really weak. I mean, there's been an upward bias. It's been slow, but it just hasn't had the power to pop out yet. That doesn't make anything bearish. Notice that the PPO is reset down to the bottom. That's usually a bullish setup after PPO comes all the way down and starts to curl up. And you notice RSI has never dropped below 50. So that remains bullish there. One of the better charts within the FATMAAN group. One of the weaker charts is Amazon. Popped up on the open, then just gave it all back and back down to 32.50. You didn't quite get the free 50 club yesterday. You only got 40 out of it. But your sell signal was on this reach up, and then when you lost the open, that's always a decent line to shoot against. That's all active trader stuff, how fine you want to try and play Amazon. $40 is, if you catch it right, it's great. But now at the bottom of the box or the bottom of the range, you can be bullish here and see if you get the move back up to 3,300. And you got to take out this downtrend resistance. So you've got some resistance midpoint. If you lost 32.50, then you're coming back down to test this gap and possibly fill it down to 3,200. So 32.50 is definitely your pivot point on Amazon. Google remains in this consolidation zone. Notice the posture of the PPO resetting at 0 line. Notice RSI resetting down to 50. If the bull run is going to continue, I expect a breakout. Notice that except for this one bar, Google has been able to stay in the upper half of this range against 2075. So I think you can stay long against 2075 and hope for a breakout for our measured move target up to 2200. Netflix consolidating here between 564 and 555. We'll see. Not a lot of energy there. Not a lot of energy in FATMAAN across the board. I mean, nothing's really jumping. It's more just grinding and holding its own. So, I tried a couple longs there. They didn't work. So, I'm just kind of sitting tight, waiting for something to happen. For those new to the channel, yesterday our group got long this Benefit Focus stock. They help bigger companies and large institutions manage their HR function and their benefit packages to their employees and associates. We can see here in early 2019, this was a low $60 stock, ran into trouble, bottomed out in March down here at an unbelievable went from $60 to $7. It lost 90% of its value over that 13 or 14 month period, which is insane. But now it spent most of 2020 consolidating below this 13 level, or sorry, 15, sorry. But now we've got the breakout. So we've got a breakout candle into a void, price void. We've got price above all the moving averages on the weekly. I think that's a great setup. Yesterday I saw 16x call buying with most everybody positioning in the March 17.5 calls. And it's this stock reports, I believe, March 2nd. So one of two things can happen. It can run into earnings over the next couple of weeks and get a push, or it will, consolidate around here and wait for earnings. But a lot of people are positioning in that March 17.5 calls. I decided to go out to May. This is a weekly chart. It's not going to move. Most likely, like a daily chart, it's going to grind. Hopefully it grinds higher. Knock on wood. I plan to hold through earnings unless we get a big move, up towards 24 right out of the gate. But that's my first target, 24 from roughly 17. So that would be a nice move there. So I am in the May 17.5 calls on Benefit Focus. Okay, let's wrap it up here. It's about 7 o'clock as I wrap up the video a little bit before. Have a good day of trading. Futures down a little bit, but nothing to worry about. Let's see how we wrap up this week. Don't forget, those that are involved in weekly options, there's of course expiration today. Make sure you run through your holdings and there's not some hidden little position where you get a surprise assignment or something like that tomorrow. Just make sure you are where you want to be. Take a look at your overall risk exposure heading into the weekend. This may be a weekend where you want to back off a little bit so you're not, petrified heading into Sunday night futures after your nice day at Valentine's Day. So I don't think we're at a point here as far as overall risk where you want to be loaded to the gills. I think you can still have a long bias. There's no sell signals, but we are extended. We've talked a million times about, all the speculative activity. Everybody and their brother is long. That's a setup for a rug pull, but we haven't seen it yet. So you got to party while the party's going on, and just make sure you position yourself on the dance floor near the exit, right? You don't want to be on the far side where you can't get out. So keep that in mind as you manage your portfolios. So have a good, strong finish to your trading week, and we'll talk to you next time. If you're new to the channel, please hit the subscribe button and alarm bell. That would be great. If you're a longtime listener, please pass the link along to somebody in your trading circle that may benefit from it. I would certainly appreciate that. Also, take a look over in the show notes where there's links to the blog site and where you can register for my content, where you'll get everything delivered in an email box. Like this trade alert yesterday, that was a midday email. You would get that right in your email box when I send that out. And then you can decide whether you want to participate in that one or let it go or put it on a watch list. Anyhow, have a good trading day. This has been Chris Bus. Talk to you next time and see you soon.